Guys, how's it going? Kunal here, Bulls on Wall Street. Hope everybody's having a fantastic morning. So it's finally happened. The president, Donald Trump, has become the third president to ever have been impeached in the United States history. So what I want to take a look at today is what the heck it means for the stock market, which is really all that we care about, right? In the end, political news and geopolitical news, the main thing is always to figure out, like, is there going to be an impact on the stock market? And then, of course, most importantly, how to play it. For a lot of people, the word impeachment just sounds like a crazy thing. You know, in your head, you think like, wow, if this happens, will the stock market crash? Will it not crash? And so let's take a look and just see what's going on with the markets today. You know, what you'll see here is, no reaction really. You can see here. So the futures market is opening up fairly just flat on the day. And so we're not really seeing any type of reaction. Now, the impeachment will go to trial in the Senate and things will get dirty. And I'm sure there'll be all sorts of hoopla. But in the end, what we have here is a good old-fashioned bull market. My mentor, Paul, used to always tell me the only thing in the market that pays is price. And so one thing that we can see just from the chart of the NASDAQ here is that the market is in a good old-fashioned gorilla run. And what I mean by gorilla run is when you are breaking out to all-time highs and you are trending up all your major moving averages, the market becomes very hard to stop. What the market will do when it's uptrending is shake off news. It's like the Teflon Don when the market is trending like that. When the market is in range, like it was for a good chunk of the summer and early fall, all of a sudden, the smallest piece of news makes the market fall. When the market is in range and it's herky-jerky and it's skittish because it's not trending and traders are just positioning themselves but nobody's getting it right, it could be President Trump farted and the market would dump down. And then it'd be like President Trump ate ice cream and the market would pop, and it'd be interest rates and this, and the market becomes very, very sensitive. But what happens is when you break out and traders have positioned themselves for that breakout, man, it's very, very hard to stop the market. So in the end, what we have to do is shake off all the hoopla that's going to be coming around with the election and really focus in on a couple things. Well, number one, we always want to follow price. And you can see even with like so many stocks going around, I mean, look at this Tesla. This thing was left for dead this summer, wasn't it? I mean, everybody's like, oh my gosh, Elon has lost his mind, right? Like, he's in these lawsuits, he's calling people pedophiles, all this stuff. You've broken out to all-time highs, and you're seeing this with a lot of stocks. Follow price. When leading names, when big-time companies like Tesla and Apple are just going gangbusters. So Apple's a $1.3 trillion company. It's almost doubled this year. Like, how do giant companies act like small caps? That's showing the real strength of the market. The other thing to really just keep an eye on, I think this is going to be the most important thing to really, really watch. What you can see here is that the Federal Reserve is starting to increase their balance sheets, which in layman's terms means that they are pumping liquidity into the markets like they were when we had QE, which is quantitative easing, back in 2008, 2009, then we had QE2, then we had QE3, and now they're calling this not QE, but it is QE, and you can start to see like the pump is coming in. So this is, you know, the increase in assets in the Federal Reserve, and you can really see like every time they start pumping this thing, the market's also pumping with it. Kind of weird, right? As soon as that the market started to rebound, like you look at when the market starts to rebound, it's very, very similar. When the market really started to speed up, right, the Fed started to really start pushing in the assets. And you can't fight the Fed. If they're lowering interest rates and they're printing money and raining helicopter dollars all over to the banks and everybody else, then that is the main thing to be watching along with the price of the indexes. So what you got to do is shake off the news and watch price. And guys, I hope you're having a great Christmas. We are having some awesome specials and contests for Christmas. What I'm going to be doing this Christmas, I very rarely do this, I'm going to be giving away one free one-on-one mentoring challenge. So what I'm going to be doing is taking one of you guys and mentoring you for 6 months for free. I'm going to let you come to my house. You're going to stay with me for a week or two, and then we're going to work together day in and day out, week by week, for the next 6 months to get you to your trading goals. I'll put an order form in the comments below, in the section below. So make sure you put in your email and get into that contest. I've had great success with mentoring people one-on-one. I am a teacher by nature, and when I get a chance to put my hands on somebody, ooh, that sounds very creepy, right? But when I get a chance to really mold somebody and work with somebody, and I love doing that, man, the sky's the limit for where you can go in your trading career, and I'd love to work with you guys. So leave your email in there in the order form, and hopefully you guys win. And as always, click the like button if you guys like my videos, and Merry Christmas, guys. I'll see you around. Take care.